show. It's our media sector special on Buy Now, Sell Now, where we have Vikash Mantri joining in to give us some perspective over the next 60 minutes and answer your queries. But for now, Siddharth, red on the screen.
Well, completely. And, though we are down by around 1%, look at the cues which we are getting from European markets and Asian markets. Most of the Asian markets are down by 2.5–3%. And, certainly, we are seeing, some sort of selling pressure coming in our markets, and especially in banking space, we are seeing, some sort of fresh short built up which is taking place. 10,000 is a key level to watch out for, because in beginning of this series, we had seen a lot of people, and not just weaker hands, but even stronger hands have written 10,000 put option. So it's not an easy level to just, breach, both from, the data perspective as well as psychologically. People might have got, 50–60 odd rupees by selling those put options. So between 9,950 and 10,000, our markets might see, some support, provided, global cues don't go bad further from current levels. But why global cues are down? And that's mainly because what's happening in US, and Trump has lit a low burning fuse to launch his long promised anti-China tariffs. Trump signed a presidential memorandum targeting up to $60 billion in Chinese goods with tariffs over misappropriation of US intellectual property. The move has caused frenzy around the global markets. Let's listen into top economist and market expert who choose ET Now to share their view on this trade.
When you see this sort of turmoil happening in the global market, it has its own impact, okay? But with this background, I still maintain, that we are very bearish on US, but I don't think it can convert into a full-blown sort of crisis, what unfolded in 2008 or something, anything like that. I think it could be a good bargaining technique from Mr. Trump itself. So I'm not worried about India and Asia in general. In fact, it could be a good opportunity to buy some of the quality names at these levels, plus minus 200–300 points in 10,000 level. It's a good way to enter the market, and all this 200 EM is a psychological level which has already broken. So it's a good opportunity to rebuild exposure.
A further slightly sort of incremental increase in the protectionism, the trade war. I think if we get further overtures, if we get further retaliation to the retaliation, then I think markets might start to price in more than just response to the news, might start to take much more of a sort of risk-averse attitude to try and front-run the development of this. Because the plain and simple truth is that more trade is basically good for global growth, and the more of this sort of tariff behavior we see, the more likely it is that the global growth story, the synchronous global growth story, is going to get undermined.
And that's, of course, about the trade war jitters that has spooked the markets globally. But in other news back home, it's this in relation to the 5,600 crore rupee scam at the NSCL. CBI has cracked down in the MCX IPO investigation. They've raided the FTIL headquarters and other residences. We have Vijay Iyer, who's getting us the exclusive details. Vijay, what are you picking up?
What we gather is that, as you're rightly pointing out, CBI is doing the search and raid at FTIL headquarters here in Mumbai and the residence of Jignesha, promoter of FTIL and MCX at one point of time, along with Mr. Srikant Javalgekar and Joseph Massey senior management, who were at one point of time associated with Jignesha and FTIL and MCX. Now, what we understand is that primarily CBI had already launched a preliminary investigations into the MCX IPO, which came back in 2012. So clearly there was some regulation violations which happened then. The investigation is doing on whether FMC, the then regulator, had flouted certain regulations by clearing the IPO of MCX, and this raids are in connection to that. We'll have to wait and see what is exactly CBI looking at, because this preliminary investigation had started a while back. All of a sudden today we have seen this search and raid operations being conducted by CBI, and of course we all know Jignesha is the main accused and FTIL in the 5,600 crore NSCL scam, which various investigating agencies are probing. But clearly a role of FMC and certain senior officials of FMC then when the it was there and IPO was cleared of MCX is under the probe. But clearly it's once again the whole NSCL scam which is coming to light, and of course the connivance perhaps of Jignesha for getting the MCX IPO cleared then back in 2011-12.
For that, MCX doesn't seem to be, getting over the problems which, the exchange has been facing since quite some time, and stock performance is clearly reflecting the issues surrounded with the exchange. Moving on, today on, media sector special show, we would be discussing about, your queries, and those queries would be completely on media stocks like DB Corp, Dish TV, Sun TV, Jagran Prakashan, Z Limited and HT Media. And to address those queries and give opinion on that sector, we have our experts Vikas Mantri from ICICI Securities and our own Kunal Bothra joining us now. Vikas, I'll come to you first. You in your note, you have mentioned clearly that you are expecting digital media to grow by 23.5%. You're also expecting TV industry to grow by 9.3% and print to grow by 6.8%. This high growth rate for digital, is it here to stay, and is it because also of low base that we are seeing that the growth rate is in high 20s? And what about the advertising growth? How are you seeing this entire sector panning out?
Okay, so clearly digital increasing market share and growing at a faster pace is very much a global trend. We have seen this pan out across economies, and India also, given the rapid increase in consumption on digital platforms, advertisers are increasingly looking it as a medium to allocate more advertising dollars, and therefore you are seeing digital grow at a faster pace very clearly. Also, from an advertising standpoint, we expect going forward the industry to start clocking mid-single double-digit ad growth. Now, we have had a relatively weak past in the 1 year where because of remonetization and GST, advertisement growth was muted. But clearly, we are now seeing trends where consumption is back and industry has settled down. And we are talking increasingly seeing managements talk about doing 15% growth. And we believe from an overall industry perspective, things should start panning out well from an advertising perspective.
Right. Thanks, Vikas, for that opinion, and we will, ask more about stocks and wealth creation ideas to Vikas at this point of time. But let's also welcome Kunal Bothra into the show. Kunal, market's not doing well, and this is on the anticipated line looking at SGX. But certainly there is some amount of outperformance when it comes to global markets. On this backdrop, I'm seeing that you are generating one buy call, and that's from an FMCG space, which seem to be outperforming and probably not related to this trade war theme, and hence Godrej CP is buy for you, and you are selling DLF and GSFC. What are you seeing on charts on these names to generate these calls?
Yes, that so FMCG is one of the few spaces like IT which has sort of bucked the trend. They're still trading at stronger part of their price trajectory or price trends. Godrej CP is one of them from the FMCG space, which looks very strong. I think trading at 1080-90 levels. The stock is just about to break out of a downward sloping resistance line, and in terms of chart structure, that could be that could have some strong bullish ramifications in the near term. So that's a buy from my side. Targets of 1134, stop loss at 1065. DLF is a sell. I discussed this stock even yesterday as well. Bearish flag pattern. The stock today confirmed a breach below the 200-day moving average, for the first time, I think the last 4-5 months odd. This could probably, result into the stock, dragging lower. We've already seen signs of weakness in many of these other real estate stocks. DLF could probably, lead the fall from, here on as well, at least in the very near term. So I'm revising my targets from earlier given levels of 201 to 196 on DLF, and stop loss could be trailed to 211. Second is, rather the third stock is GSFC. I believe that the stock is also on the verge of a fresh breakdown on the short-term charts. It's confirmed, a breach below that 119, 120, which was acting as a good support zone for GSFC. But the fact that it's opened below this, I believe that it could convert into a bearish flag pattern. So that's a sell. Targets of 112, stop loss 122.
Okay, buy on Godrej Properties, DLF, and a sell on DLF as well as GSFC. It's Godrej Consumer actually that Kunal is betting on. But let's move away from that and focus in on all the questions that you have sent in to us. This is coming in on the media sector special. Let's start off by addressing the first question on DB Corp. Rachna has sent us a query from Mumbai. She's bought 100 shares of DB Corp. Her price point is 340 and now wants to know if she should stay invested or she should sell. So Vikash, would like to come to you. How have you read into the kind of earnings, the kind of circulation growth that DB Corp has given? She's purchased it at a bit of a high price. The stock is currently quoting at 293. What would be, your sense as to how you're looking at DB Corp?
Okay, so the print space has seen some turmoil over the last 2-3 years where ad growth has been significantly below industry and especially so much more for DB Corp per se. The print space is increasingly seeing more ad spends now shifting to the digital medium, and therefore advertising dollars to print space will be limited, and therefore we are also talking about only a single digit ad growth in the print space. When we put that into picture, clearly it doesn't mean a very strong positive outlook on the print stocks. And out of this lot, we do not we have a avoid or a hold rating on reduced rating on DB Corp purely because we believe that growth will be slow going forward. Also, the print stocks in the near term have a challenge in terms of higher newsprint prices, which has increased over the last 6 to 9 months by around 15 to 20%, which will make the near-term financials look weak. So clearly, we would recommend people to avoid DB Corp as of now. In the print space, clearly we prefer Jagran Prakashan as our preferred bet.
Okay, and we'll come to that as well in just a bit. But for now, Vikas does not have a very positive stance on DB Corp. Kunal, in the last 1 year, this has not been a very good wealth creator. In fact, just in the last 3 months, the sell-off that we have seen in the stock has actually accelerated quite a bit. What's your stance on DB Corp's chart patterns?
It's not a chart which has done anything remarkable in the last, I think, 2 years, 3 years. Mobina, I think for a good part of the last 2 years, it's been in a 130, 140 point range, closer to 280s, where there are some serious and strong supports for the price chart of DB Corp, and closer to 420 approximately is where you find the stock taking resistances, supply coming back into the stock prices, and you see those reversal patterns as well on long-term charts. So I sense that broadly, it's into a range kind of a territory for the last 3-4 years, and I think if you're playing for maybe a reversal of trend and continuation of the uptrend rather, then I believe keep 280 as a strong support zone, where you could probably look to average further. If the stock takes back support at these levels, and which it has been doing historically, at least in the last 3-4 years, it builds in a strong case that you might see the stock reversing back on the uptrend. So I think keep this 280 as a strong support zone. If the stock comes back to those levels, I sense that you should look to average further because the risk reward would be far more better at those levels.
Okay, that's the view coming in on DB Corp from a fundamental as well as a technical perspective. Let's move on and bring on board our next query. We have N. Shankara from Chennai who has sent in his question. He says he has bought 150 shares of Dish TV at 81.2 rupees per share. He has a 2 to 3 year time horizon and he wants to know if he must hold or sell. Well, Dish TV certainly has seen tough times. It's in fact at its 52-week low, if I'm not mistaken, all the way from levels of about 100 or 120 rupees. It's now almost halved in the last 1 year. But of course, there's been an event as well, and that's in relation to the merger with Videocon. Vikash, how do you view Dish TV, especially with this merger finally being completed with effect from yesterday? Is Dish TV now worth holding?
Okay, so clearly Dish TV has had troubled financial numbers in the last 1 year, and which clearly reflects on the stock price performance of the company. However, the key event that we are waiting for Dish TV is the merger with Videocon, and we believe there should be significant synergies once the merger gets into play. And these are relatively easy synergies to play out, given these would be largely dependent on B2B transactions. So clearly we are talking about that over a period of time, these synergies could lead to 300 to 500 crores in savings for the merged entity. So Dish TV is right now our preferred or the best bet in the media space. And now with the merger already announced as of effective yesterday, we believe it's positive times ahead for Dish TV. Remember, we've had a long period of digitization over the last 5 to 6 years, the fruits of which are now started to get visible. There's also a lot of investment in all HD content and HD boxes that have gone, which should help in overall ARPU increase for the sector, which will bid well for all the DTH players that way. And Dish Videocon with the merger become the largest player in this space by a margin, and that should help Dish TV for sure. So we have a clearly very positive outlook on Dish TV.
Digitization benefits will kick in, plus the synergy benefit from the Videocon D2H merger. That's going to be a key driver for the company. But trading at 66.4 as we speak, and Kunal, the 4-month chart, the 6-month chart hasn't been all that encouraging either. Are there any signs of some potential breakouts? What is it that you're pointing toward?
Well, I think, if the time frame is, on the longer term side, 2 to 3 years, then, I think you probably then fall back into the long-term chart patterns. And for Dish TV, I think the last 6-7 years, the stock has been onto a strong uptrend. I think from 2008 bottom when the stock was 13.5 odd rupees, it had its own periods of strong rises, strong uptrends, and similar retracement levels as well. But largely, I think the trajectory and the price pattern is still bullish given the chart patterns over a longer term time frame. If I then look back into strong support zone, then I believe 60 approximately is a very strong support zone for Dish TV. And the last couple of weeks, even though it's been negative for the stock in terms of price trend, but the fall seems to be getting arrested. You see the fall not accelerating on a subsequent basis, and you see buyers sort of coming back into the stock. So maybe I think there could be a case where 60 might hold on in terms of Dish TV. That could be a good level where you should probably look to average further and hold on to it from a longer term view.
I hope you've taken note of those levels that have been flagged up based on the technical chart patterns. Kunal, thanks for joining in and giving us your views. Vikash, do stay with us. We have lots more to chat about. Get in your wealth creation ideas on the other side. And you guys have sent in your stock queries on Jagran Prakashan, Z Entertainment, as well as HD Media. We will be addressing that when we return on Buy Now, Sell Now, the media special.
Hello and welcome back. You're watching ET now. Markets down by 135 points, and on my screen right now, HUL is at the lowest point of the day. In beginning of the show and beginning of the market, we were talking about that how FMCG is not linked to trade war, and probably you may not see correction in FMCG space. Some of our experts have been giving buy call in mid-cap names over there, but HUL is down substantially and pulling market down 136 points down for Nifty. Bank Nifty down by almost 500 points now. Let's also welcome Dr. C.K. Narayan into the show. Dr. Narayan, this kind of market below sub, 10,000 mark, what are your sell calls? And I'm taking liberty to assume that, you are giving sell calls.
Well, it would be fair to give sell calls at such juncture because the trend of the market, at least in the near term, seems to be continuing to the downside. Now we have Bank Nifty clearly going below 24,000 and headed towards 23,500 levels. And you have Nifty below 10,000. So both of this would have certainly broken the backs of the, the bulls as it were. And with the market largely bereft of buyers at the moment, I think even small selling would probably send up, send prices down a little. So selling short would be.
I think we've snapped that line, and we'll connect to Dr. C.K. Narayan again. But then let's take some wealth creation ideas from Vikas Mantri. Vikas, your wealth creation ideas are Z and Dish TV. And Dish TV you did touch upon when you were answering the query of our viewer. But then you did mention about ramping up and more HD content, and Dish TV can benefit more out of it. And Z also, as I can see from your report, that they have also launched this OTT platforms as Z5. Now my question to you is, in this world where more and more people, and one of my co-anchor has been behind us to switch to Netflix, what kind of competition you see to conventional media from the platforms like Netflix, and in overall scheme of things, why are you suggesting to buy Z and Dish TV as a preferred picks in this space?
Okay, that's a very interesting point, and clearly, yes, more and more people are interested in Netflix. But when we say more and more people, which population are we talking about? Remember, Netflix today in India largely solves the requirement of English content as a viewership option. And if you look at all content consumed in India from the television side, English is less than 2% of entire viewership. If you look at digital video consumption in India, share of English consumption is only 7%. So for anybody for the larger masses to get their requirement of content be consumed, they still have to go to the popular broadcasters like Z, Star or Sony until unless we have significantly huge investments coming into content from the OTT players like Netflix or Amazon Prime or Hotstar in that way. Now, globally, we have seen consumers move to Netflix today because Netflix today provides a cost-effective and a better content solution in those markets. Netflix is available in the US at 1/10 of your cable cost, and today Netflix nearly spends similar amount of dollars as the larger broadcasters do in those markets. However, that's not the case in India. Today, in India, most of the content is being curated by the broadcasters, and OTT platforms are yet significantly behind in terms of providing Indian content that way. So until we see the Amazon Prime and Netflix providing us enough of Indian content, I think the challenge from them is limited, and that is where I like players like Z who are doing their own stuff on OTT with the recent launch of Z5. And you will notice when you go into the app, you have a huge amount of original content, you have a huge amount of Indian movies and stuff like that, as well as they bring you about a lot of Western content as well. So Indian broadcasters are taking this challenge head on, which is coming from global OTT players, and investing in them, and that should reduce the risk of viewership shifting from conventional TV broadcasters to these OTT platforms where the broadcasters themselves can provide consumers the option. And that is where I see Z doing a good job. We also would recognize that Star and Sony and Viacom are also doing equally good jobs in trying to build their own OTT platforms. So we don't see that much as a risk from Netflix as of now for the Indian TV broadcasters. What is positive about Z going forward is we're clearly seeing a change in their market shares, where they're improving market share across geographies. Also, we talked about earlier that we've had a period of 4 to 5 years of terms of investment into digitization and into HD content. This should finally lead into better ARPUs for everybody. And when we talk about better ARPUs from the consumer, the benefit of that should eventually start following to the broadcasters. Also, remember the new tariff order, which was stuck with the courts, is expected to come out sooner given the Supreme Court verdict, and that should set the tone positively for all broadcasters. And therefore, we clearly like Z. And we talked about why Dish, largely because of the synergy event that we are positive about.
And very nicely put it, Vikas. Because one question which may not be, just related to any stocks as such, but at large. Now there is this huge scare that digital will completely take over the traditional media, and we are still quite many years behind when it comes to digitalization compared to years. But we still see there that TV is a very effective medium. How or what is your opinion when it comes to digitalization? Do you think digital and traditional medium of TV would coexist, or do you think that going forward digital would be having the lion's share in this entire pie?
So I would answer the debate in this way. It is not about digital or conventional TV or who will win this. The person with better content will win this race. And clearly what we have seen in the Western markets is OTT or digital platforms actually coming out with superior content and therefore looking to do well. But after the huge success of Netflix today in the US market, what we should realize that it is still 4% of the entire pay TV revenues in those markets. Whereas in India, they have still just set up shop clearly. So to me, the challenge of who will do well, whether it's traditional TV broadcasters or digital, will be clearly a function of who is ready to invest in content. Now, the challenge here is clearly across to the Indian broadcasters in a way. Remember, over the last 10-20 years, the entire broadcasting model, or largely the broadcasting model, has been advertising focused. We have failed to charge consumers as access fee, and that talks about the low ARPUs that we have in our country at $3 to $4, which basically means that we have not gone to the consumer and asked them to pay enough. And when we have not done that, this reduces our ability to spend on content. Today, if you look at Amazon Prime's content, that is Inside Eyes or Breathe, if you look at the quality of content, they're actually superior, or if not superior, similar to what the broadcasters are putting in. So clearly, it is a challenge of who puts out the best content. The challenge of distribution, which was earlier an edge with TV, is now slowly going away, because let's say in a 3-4 year period, we'll have huge broadband penetration. We're already seeing a huge surge in mobile broadband penetration. So the challenge the edge which TV had of distribution will no longer be there, because people will have enough handsets and 4G data speeds to go out and watch a lot of this digital content. So the challenge finally ends up on content going forward.
Yes, content certainly is king, and with all these tariff wars, I guess the digital way of watching television has certainly come out as a winner. Let's bring on board more queries then, and we have Anuj Sahani from Jamshedpur who has sent in his question. Anuj says he's bought shares of Jagran Prakashan at 163 rupees per share. He wants to know if he must hold or sell. Again in the print space, and you know, Vikash, you had earlier said that you would prefer a Jagran Prakashan over a DB Corp. So if you could just give your rationale on why you would like this stock.
Okay, so Jagran Prakashan has been a relative outperformer among the print stocks, clearly in terms of growth and advertising. And also, if you notice the history of the company of the last 10 years, they've been very good in terms of cash distribution and also in terms of capital allocation. We have seen the company do multiple acquisitions, and the recent acquisition of Radio City, they finally could deliver a huge value for the shareholders, and it was recently IPO'd as well, bring out gains for the Jagran Prakashan shareholders. So Jagran Prakashan, given its presence in key markets like UP, Uttaranchal, which are relatively doing better, and also the recent readership survey put on a strong growth for the readership numbers, we like Jagran. See, relatively, one should understand that in India, while print is at a challenge, the challenge is more so much for English print, which has seen declining advertising. When we're seeing people move from readership from print, it is first happening from English print, and maybe vernacular print is relatively far off in terms of threat from the digital, and therefore vernacular print is relatively much more stable as compared to English print that way. And Jagran, largely being a Hindi player in the print space, and have had an excellent track record of capital allocation as well as cash payouts to shareholders, I think is a good bet going forward.
Okay, so when it comes to the overall ad revenue growth, largely a challenge for some of the English print media players. Vikash has given his views on Jagran Prakashan. He seems fairly upbeat, talking about a target price at about 200 rupees. Vikash, thanks for those thoughts. Really want to chat with you about more media stocks, and we'll do just that for now. Let's take a quick break, come right back as we talk more about Sun TV and other broadcasters, as well as get in the management of Bharat Dynamics when we return. Welcome back. This is Buy Now, Sell Now. Continues to remain a very slippery market at hand. We're trading at 99.71. That's down 140 points plus, with the Sensex down 466 points. A long list of losers led by Vedanta, Hindalco, Yes Bank, Tata Steel, Axis Bank and SBI. We're right back to the lowest point of the day right now, with the broader end of the market seeing now a 3% gash. But we're in conversation with Vikash Mantri, talking about how you should be approaching the media sector and what the outlook is on individual stocks. We've got a query coming in on Sun TV from Monal Patel, who sent it to us from Gandhinagar. Monal has bought 50 shares of Sun TV at 724. She's been holding on to the stock for the last 1 year and now wants to know, should she stay put or should she exit? Well, you know, there were a lot of those political overhangs that there were a lot of the political overhangs, Vikash, that plagued the stock. What exactly would be your fundamental outlook?
Okay, so whatever we spoke about the broadcasting space is true for Sun TV, but Sun TV has more edge with it in terms of two different things going on in its favor. One, advertising growth for Sun TV now will be faster and better, because after losing market share in markets of Andhra Pradesh or Kannada, they've started to gain those market shares back, and therefore growth for Sun TV from an advertising perspective will be higher than the industry, just because its market share is improving in most of the markets that it is present in. Second is on the digitization front. Now, on the digitization front, we were not going in for digitization in the south market of Chennai or Tamil Nadu for a long period of time. And it is only in the last 6 months we have seen that happening. So it was the last leg of the digitization process in that way. And therefore, Sun TV till now never got the true benefits of digitization, which we believe will now happen going forward for them in a big way. Also remember that they have got very lucky with their IPL team. When Star goes out and bids significantly higher for the IPL team, it's the IPL team owners who benefit a lot. And clearly we're seeing from a loss-making IPL team, as soon as the new contracts come into place, the IPL business should start to
I'm going to have to come in there because
positive,
it's a time-bound commitment, and we have to connect with the management of Bharat Dynamics, who is now joining in. A bit of a whimper of listing, largely on account of the market momentum. Vyodya Bhaskar, who is the CMD of Bharat Dynamics, is with us on the show right now to talk about the story ahead for the company. Thank you for joining in, Mr. Bhaskar. A very interesting space. The total guided missile and torpedo market in India is pegged at about $25 billion. It's expected to grow 4.7% until 2026. How do you plan to take advantage of this growth? What's the story for the company?
Yeah, basically, as you have seen, last financials 13 to financials, am I okay? Financial 17. We have grown from 1100 crores to 4,860 crores. It speaks about, say, five-fold growth at a CAGR of 30. So that demonstrates our capability. And the forecast that are talking about is almost 4 to 5 CAGR. I think we definitely would be able to cope up and fulfill that demand of services. Also, one more important thing I would like to say is the government policies like, say, IDDM, DPP 2016, talking about indigenously designed and developed products on top priority and for services to acquire, and also the Make in India. So with these things, the more and more trust is there on the product range which BDL is manufacturing, and also the performance which we have demonstrated in the last 4 years. Services have started keeping more and more reliance on us. So in that sense, we have an exciting years to come in the coming period.
Okay. At the end of January, 2018, you had an outstanding order book of about 10,500 crores. It's equivalent of twice of last fiscal year's revenues. So tell us, what are your projections for growth in your order book?
Yeah, order book already, as you said, 11, almost close to 11,000 crores. That's about 2 years plus we need to liquidate this. Plus, of course, generally on an average, last 4 years, if you have seen, we have an average inflow of orders of about 2,000 crores. And by the way, the orders in pipeline, the various negotiation processes are already on. We definitely are expecting much better an order inflow in the year financials 19. and together I think we will have a good demand to fulfill in the year, say financials 2021 and all that.
So revenue rose 30% annually in the past 2 fiscal to reach around 4,800 crores approximately in FY17. Can you share projections for revenues and operating margins for the rest of the year?
As I said, our order flow as exists itself demands to be liquidated at a range of around average 5,000 crores, 4,500 to 5,000 crores in the coming years, and the big ticket programs are expected in the coming 1 or 2 years. So and their executions possibly will be in the year say 21 onwards. And I'm sure that as the products are all demanded from BDL are being, number of products are demanded, like say very short range air defense program, very MRSAM program, and of course continuity of the current Akash program, and addition of say a heavyweight torpedo and Varunasra. All these put together, particularly the definitely the execution demand will be much higher in the years to come.
Well, thank you, sir, for joining us and sharing the growth path and some numbers related to your companies. Let's take a quick commercial break at this point of time. 150 points down for Nifty, almost at lowest point of the day, and 500 plus points on Bank Nifty, clearly suggesting that selling pressure is not abating, and definitely, you might see further downside from current levels.
Okay, and at this
Welcome back. Still tuned into Buy Now, Sell Now. It's our media sector special. It continues to remain a bloodbath on the Lal Street. But we were talking about individual stocks and queries, discussing Monal's query on Sun TV. She's purchased it at 724 and asked if she should hold on. So Vikas, what's the fundamental story? We cut you halfway. You were talking about the overall ad and subscription revenue growth and the margin outlook for the company.
Okay, so clearly we talked about how advertising should be a much better growth for Sun TV, given it has market share gains in almost all of its markets that it operates in. And also the digitization benefits for Sun TV were lagging because Chennai as a market or Tamil Nadu as a market has not gone in for digitization until 6 months back. So given that now Tamil Nadu is getting digitized, clearly the benefits of digitization should also start flowing through for Sun TV in a big way. Also, another important benefit for them was the IPL team. Just because Star went in and bought in the IPL rights very aggressively, it means that the business of IPL from a loss making immediately turns profitable as they get a higher share of the broadcasting rights pool as a team owner. So clearly all these three things bode well for Sun TV, and we prefer broadcasters currently clearly because of positive ad growth and digitization kicking in.
On that note, Vikas, really appreciate you joining us on this very special media special show on Buy Now, Sell Now. It's been a great interaction, great getting in lots of interesting inputs from you, and thank you once again for joining in. We hope you join us next time as well when we have a segment like this. But with that, it's a wrap on this edition of the show. Thank you for watching. Stay tuned. Market Sense comes up after a short break.